Are you ready to take your options trading to the next level? Today, we're diving into intraday trading strategies for S&P 500 options. Whether you're a beginner or a seasoned trader, this video will give you the tools and techniques to maximize your gains in a single trading session. Hey everyone, welcome back to where we give you everything you need to become a better trader. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss a new video. Today, we're going deep into the world of intraday options trading on the S&P 500. We're going to cover everything from what S&P 500 options are to advanced trading strategies you can start using today to profit from the market's daily movements. So, if you're ready to learn how to make smart trades and avoid common pitfalls, stick around. Let's get started. So, what are S&P 500 options? Essentially, options are financial contracts that give you the right, but not the obligation, to buy or sell the S&P 500 index at a specific price. This is called the strike price, before the expiration date. Now you can trade two types of options, calls and puts. A call option allows you to buy the index if you think the price is going to go up, and a put option allows you to sell the index if you think the price will drop. But here's where the real power comes in. These contracts are leveraged, meaning you can control a large amount of capital with relatively little money. This is what makes them so appealing for intraday trading, where you can capitalize on the market swings. Why should you focus on intraday trading? Well, intraday trading means you open and close positions within the same trading day. This strategy eliminates the risks associated with holding positions overnight, such as unexpected news events or market gaps. And when it comes to trading options on the S&P 500, volatility within a single day can give you plenty of opportunities to make a profit without needing to worry about what happens after the market closes. Intraday trading can be fast-paced, but it can also be incredibly rewarding if you know what you're doing. And the S&P 500, being one of the most liquid markets out there, ensures tight spreads and quick order executions, making it ideal for short-term strategies. Before diving into your first trade, it's essential to have the right tools at your disposal. You'll need a reliable trading platform like Think or Swim by TD Ameritrade or Interactive Brokers. These platforms offer robust charting tools, real-time data, and easy order execution, which is crucial when you're trading intraday. You should also be using technical indicators to identify potential trade opportunities. My top 3 indicators for intraday options trading are the following. 1. Moving averages. Use the 9 and 21 period moving averages to spot short-term trends. 2. Relative Strength Index, RSI. This tells you if the market is overbought or oversold. Look for values above 70 to consider a short, put option, and below 30 to go long, call option. 3. Volume analysis. Make sure that any breakout is accompanied by strong volume. It's one of the best ways to confirm a real move. Let's talk about pre-market analysis. Before the market even opens, you should already have a rough idea of how the day might play out. The first thing you want to check is futures data. This gives you a snapshot of where the market is heading. Are futures pointing up or down? This can be a good indicator of how the market will open. You also want to be aware of any major economic news coming out that day, like job reports, Fed announcements, or earnings reports from key companies. News can trigger huge moves in the market, so always stay informed. Now, let's get into the heart of intraday trading, reading chart patterns. When you're trading intraday, you'll be looking primarily at 5-minute or 15-minute charts. The goal here is to identify key support and resistance levels. These are price points where the market tends to bounce off or break through. Once you've identified these levels, you want to look for patterns like breakouts or pullbacks. For example, if the S&P 500 is testing a resistance level and volume spikes, that's a potential breakout opportunity. If you're bullish, this is when you'd enter a call option. Conversely, if the index breaks below support, that might be your entry signal for a put option. Let's talk about timing your entry. Once you've spotted a pattern, wait for confirmation before entering the trade. For example, if the market breaks above resistance with strong volume, that's your green light to enter a call option trade. Choose a strike price slightly out of the money for higher leverage and faster potential profits. When executing an intraday trade, make sure to choose an expiration date for the same day. This avoids overnight risk and helps you stay focused on short-term movements. Risk management is crucial in intraday options trading. You should never risk more than 1 to 2% of your total trading capital on a single trade. For example, if your account is $10,000, you should not risk more than $100 to $200 per trade. This way, even if a trade goes against you, you'll still be in the game. Always set a stop loss. This automatically closes your trade when the price reaches a predetermined level of loss. It's your safety net, and it should be non-negotiable in your trading plan. A common strategy is setting your stop loss around 10 to 20% of the option's value. Let's break down a quick example so you can see the strategy in action. Say it's 9:45 a.m. and the S&P 500 has just broken above the 4,500 resistance level on strong volume. You decide to enter a call option trade with a 4,505 strike price expiring at the end of the day. As the market continues to rise, the S&P 500 reaches 4,510 by 11:30 a.m. At this point, your call option has increased in value, giving you a nice intraday profit. You decide to close the trade, locking in your gains. The entire process, from identifying the setup to executing the trade and closing the position, took less than 2 hours. No overnight risk, no stress. Before we wrap up, let me give you a few final tips for intraday options trading success. 1. Stay disciplined. Don't get greedy or emotional. Stick to your trading plan and don't chase losses. 2. Keep learning. Markets are always changing. Stay on top of the latest trends and strategies to keep improving. Start small. If you're new to intraday trading, start with a small amount of capital to minimize your risk while you're still learning. Remember, intraday trading can be highly rewarding, but it's not without risks. The key is to be disciplined, use smart strategies, and always manage your risk properly. That's all for today, guys. I hope you found this video on intraday trading S&P 500 options helpful. If you have any questions or if you want me to dive deeper into any topic, drop a comment below. And don't forget to subscribe for more trading tips and strategies. Thanks for watching, and I'll see you in the next video. Like, comment, and subscribe. Follow us on Instagram for daily trading tips.